Hello guys, today we are gonna discuss about something very important. Actually, that is for me is the key of trading is risk management. Many guys, many traders in the space, especially in crypto space, just they buy something hoping to be rich next day on 1 week. Don't get me wrong, it's possible, yes, but but this is just gambling, right? So you have no idea how many times I read in the crypto groups. Many people they are losing 50k, 100k. Yes, they are holders because they have no choice. If they sell, they will just get wrecked more, right? So let's think about this. I'm gonna share my concept about why risk management is the key of trading. I'm gonna start with 2017 in weekly chart. Okay. This is a logarithmic chart. Look at this. Remember, always my videos I like to start like this, like we don't know the future, we cannot predict the future because we don't have powers, right? I mean, we are not the Avengers, right? So, well, at least in my case, I cannot see the future. I don't know what is going to happen, right? So that's why we are using different tools, different systems to try to project the price in the future, right? But we can be wrong anytime. Actually, this morning, I took a small stop loss. I got stopped by Bitcoin because Bitcoin now is bouncing a little bit, and I got stopped. It's normal. As a trader, it's normal. We cannot win all time, but I don't feel sad or emotionally affected. Why? Because I use risk management, and I took my stop loss as a part of my journey as a trader. So, but well, let's think about this. Now we are in 2017. Remember, the past of the chart is for studying and learning. Making money is in the right side of the chart, okay? But if we want to study, if we want to improve our systems or technique, we can use the past. So now, think about this. You are totally new in the crypto markets, and someone told you, hey, Bitcoin is to $1 million, and you buy, I don't know, maybe $15,000, hoping to get rich maybe in 1 year, 6 months, because someone told you, the media told you Bitcoin is to the moon, and Bitcoin is wow, amazing. And after that, you get FOMO. Why? Because you see, oh, okay, Bitcoin was at $1,000, I missed it. Bitcoin was at $2,000, I missed it. Bitcoin was at $5,000, I missed it. My God, I need to buy. This feeling, FOMO. And Twitter, YouTube, now TikTok. In 2017, TikTok was not famous. Media, in my personal opinion, is just a way to manipulate people. So now think about this. You bought in 2017 at $15,000. Okay, this area. No risk management, just hoping, just okay in FOMO. Never mind, because it's your first time in the crypto in the bull market, and you wait maybe for 1 week, right, or 2 weeks. It depends, 1 month or 2 months. So after that, you see Bitcoin the next week pumping a little bit to $20,000. You don't sell because you said no to the moon, right, to Mars. And after that, you see, okay, I am losing money. Now Bitcoin is at $14,000, and after that, next week, $12,000. Okay, no problem. It's just a correction, right? Just a correction. Okay. We need to wait. We hold because we believe in Bitcoin and Bitcoin to the moon, right? And after that, okay, you see 20,000 tested. You enter in FOMO. Even you buy more if you want. I don't know. And suddenly Bitcoin is getting rejected hard to $8,000, and you don't know what to do, right? Think about this. You invested $10,000. Now you are down 20%, something like that. So instead you having $10,000, now you have $8,000. So from here, say, okay, Bitcoin is normal. YouTubers will tell you, no, don't worry, it's a correction. We are in still a bull market. Don't worry about it. Everything is fine, to the moon. Buy the dip. always buy the dip, right? Buy the dip, because that is the way how in the bull market people, they are thinking, just buy the dip. And after that, yeah, okay, Bitcoin to the moon again, right? Bitcoin to the moon, failed again. Oh my God, it's failing, $7,000. Now you are, from 15, you are almost 50% down. So no, Bitcoin cannot crash more because it's just 50%. 50%. I mean, it's unbelievable if we see Bitcoin crashing more. After that, you see, wow, nice rally, perfect, entering FOMO again, and after that, it's getting rejected, and after that, it's just sideways and dropping more. So from $50,000, $15,000, sorry, all the way down to $4,000. So you are down from here to here 70% or 75%, 80% of your investment. So think about this. How many people in this channel, well, how many times that happened to you? So I think more than just one time, right? So this is very sad. So that's why risk management is the most in trading, not just cryptocurrencies, in trading in general. Why? It's very simple. Now you are down here from $15,000, you are down 70%. That means you have just maybe $3,000. And the most funny thing is, you sell here because you are in panic. You sell here, and after 4 months, Bitcoin start going up. Wow, amazing, right? So that means you don't have trading plan, you don't have risk management, and you don't have nothing. Just you are a gambler. Sorry for saying this, I don't want to be rude, I respect. But if you want to gamble, just go to Las Vegas and you can play in the casino. So this channel is this video is for education, right? So we are gonna learn how to avoid this situation. Okay, first of all, we are here again. Okay, we are here. We don't need to be experts to think about this. Okay, I have $15,000. I'm going to buy at 50. I have $10,000. I'm going to buy at $10,000, $15,000 here because I am in FOMO. But this is the key. I'm going to implement in my system, well, not system actually, in my investment, a very simple risk management. Okay, I don't know anything about technical analysis, but maximum I can lose $2,000 in this gamble. Okay, so just $2,000. Okay, so after that, the price is moving up, 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 and you are still in the game. And here is when you close your position. Doesn't matter what you closed here, you lost 20% of your capital, so you lost just $2,000. So okay, but what will happen if Bitcoin is to the moon, right? Maybe I was right. Maybe Bitcoin is going to the moon, and maybe Bitcoin is going to, I don't know, $50,000 right now. Think about this. We don't know the future. You don't know. I don't know. So, because we don't know if Bitcoin is in the end of the bull market or is going to have outer leg up, you don't buy here. I mean, you don't sell here. You must implement a risk management. Why? Because, for example, it's an example, okay? If you sell here, you stop is you sold here and lost. You lost $2,000. Perfect. But after that, you will see the market reversing. But look at this. It's going down. You don't know this, right? You don't know this. So that's why it's better losing just part of your capital, because you are still in the game. You can buy more in the future, or just you can lose everything. There is one guy who said, go, I don't know this, I cannot remember this expression. Go all in or go home, something like that. This is the perfect phrase of a gambler. Yeah. So here I don't want to go home. I want to be in the game. So I prefer to lose $2,000, but maybe in the next trade, in the long term, I can recover I recover that money, and also I have my $8,000 to invest. Because, for example, right now, Bitcoin, in this example, all the people who bought here in this area, they got trapped, and mostly all of them just retail traders or people who are just gambling, and they crash when Bitcoin crashed. And here they sold. All the people who bought here, they sold here in panic, thinking Bitcoin is a scam and it's just going to zero. So instead of losing 70 or 80% of your capital, you can lose maybe 10% or 5%. And when the market reverses, you will still have capital to enter in the game and buy cheaper. There is other way, like people without experience in trading, they are investing. Yeah. For example, in this case, Bitcoin is into $20,000. People said, okay, I have $10,000. I'm going to buy $5,000 here. If Bitcoin crash more, I'm gonna buy other $2,000 here, and I'm going to buy more other $2,000 here. Is $5, $7, $9,000. Okay, my average price is around maybe $10,000. And Bitcoin start crashing here, and okay, other dip, I'm going to buy more. And they have an average price, right, around $10,000. Don't get me wrong, maybe it's better than the last one. Well, I mean, going all in and just one position, of course, is a very bad idea. But the problem with this is you need to wait. How can I say this? You have to wait, when the price is having a really hard correction, not just 10% or not just 5%. If you want to do that, is because the price is correcting at least 25%. Every 25%, maybe you can start thinking to buy again. Not just with 5%. 5% for Bitcoin is nothing, but 25% potentially, yes, is significant. So these people who start trying to, okay, $15,000, $11,000, $8,000 around here, and my average price is $10,000, because the distance between all the corrections are almost nothing in macro scale. In weekly chart, well, what's gonna happen? Just get wrecked. And again, selling in loss. So I prefer, in my personal opinion, my personal way, losing just 1% or 5% of all my capital than 50% or 70%, because in the future I will not have money. If I lose 50%, 70% of my capital, I will not have enough money to enter in the market. So I am out of the market. Of course not. I want to be in the market. I want to be in the market. I want to be in the game because I want to make money. So that's why I want to protect my profits or my positions. So this is the explanation, and I'm going to show you the last example, how it's a very bad way just buying because you are in FOMO. Here, many people, you have no idea how many people ask me, hey, should I buy right now Bitcoin? Because Bitcoin is to $100,000. Always my question was, okay, you can buy if you want, but I have a question. Why you want to buy here when you didn't buy here or here? Why you didn't buy here? So after 500% up, you want to buy. It's the same logic like this meme coin, like million token coin. People want to buy an asset like it's up right now, even now with this dump, 50%, because the original value was $1. But in their mind, they are thinking it's cheap. I don't know. I don't understand that logic. Sorry, but I don't get it. So, people were asking me here. No, it's because the media says they are saying to the moon here. And what happened after that? The market reversed. And all this area, they said, no, the correction is over. It's over. We are going to the moon. We from here to $1 million. Okay, totally fine. Maybe I can be wrong. But just think about this. Think about this. If you want to buy here, for example, totally fine. Because finally Bitcoin had a correction of 50%. It makes sense to start buying here. Yes, as an investor, totally okay. Yeah, but it's different when you want to buy here because you are in the top. Yeah, so when the price dumps, people don't want to buy, but when the price goes up, they want to buy. So what is the? I mean, I don't get it. One guy in my Discord group asked me, no, I would prefer to buy here in a bull market because I know it's going to the upside. And I said to him, I will never buy here. Why? Because I will buy here or here or here before of the move happen. Yeah. So let's analyze around a little bit Bitcoin right now. In weekly chart, we are in uptrend, in downtrend. So we have this down, this bounce, this down, and now this bounce and this down, and here potentially we are gonna have other bounce. But the problem with this, even in weekly chart, Bitcoin is in downtrend. Why? Because always is here, this high, this high, this high. It always is doing lower highs. And also, as you can see here, this area is the area where buyers are here. People are buying $30,000 every time. 1, 2, 3, 4. In my previous video about price action, I explained to you how price action works, right? I mean, based on my experience. So this video is about risk management, right? So remember, if you want to understand what I'm talking about, what I'm going to say right now, you must watch, please, the previous video because you will understand better what I'm talking about right now. So first, we have of resistance or demand zone here in the top, right? The first level, and this is the second level. And we can think like maybe we have a middle level, all this area. Yep. And we have the bottom of this level. Okay. Remember, I don't like to use lines because lines, for me, in my personal opinion, they don't work. So, if you see now this price action, we have three levels: $40,000, $35,000, and $30,000. Okay, Bitcoin is coming from here to here, here to here, and coming to here. And where is the next area of selling? $34,000, $35,000. I am expecting this weekend. Now, actually today, we are gonna see Bitcoin testing around $34,000, $35,000, and we will see maybe potentially other down. So, if you want to buy here, no. Why? Because in our previous video, we learned we don't buy area of selling or resistance. We don't buy here. We don't buy here. We buy here. We buy here. We buy here. 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 We don't buy here. We don't buy here. We don't buy here. So, okay, let's think about this example. How I'm going to start thinking to buy in this area, is very simple. The price must break this area, come here and test this area, reject here, and here this area is gonna become the next support. So we can start thinking, if Bitcoin start doing sideways, we can start thinking to start buying here, and we can start thinking to sell, not to the moon, not to Mars, to in the next level. Okay, so now we know this, right? How we can handle our risk management is very easy. First of all, we buy in the supports. The last buy for Bitcoin was here. So after confirmation in my personal my trading, I bought here, and in my case I sold here in this area. I sold here in my case. My position, it was at $30,000, but I know, historically speaking, this is the area of interest for buyers. So I'm gonna set my risk management. How? Very easy. If I see 1-day chart, I can add here. I bought a $30,500 around here, and look at this. I can manage very easy my stop loss with 5% or 6% of loss if after the confirmation. Of course, I'm not going to buy here because I don't know what is going to happen. Maybe Bitcoin is going to fall down. I want to wait for confirmation, watching Bitcoin bouncing in this maybe in 4 hours at least, or 12 hours. And after I saw it, I can start thinking, okay, bulls are defending against this level. I'm going to buy again here, and I'm going to manage my my position. How? I'm going to set my stop loss. Maybe not exactly in the previous low, because market makers, they know this. I'm going to have a gap, a small gap around here. Thinking like if the market just breaks down, it could be a week, and after that just bounce. But as you can see here, I am risking just 5%, and I'm going to sell where I'm going to sell in the next area of resistance. In my case, I was trading 4 hours. Let's do this in 4-hour chart. Bitcoin, we don't know here. We don't know this, right? Bitcoin is doing this. It was doing this maybe 2 days ago. But we know something. In 1-day chart, the area of interest is all this area, right? $29,000, $30,000 is the area of where people in macro time frames, 1-day chart, they are buying. So what happened after that? I can see after maybe 8 hours, 12 hours, Bitcoin is consolidating in the lows. So that means every time when you see the price consolidating in the lows, the probabilities to go to the downside are lower. So look at this. After maybe 1 day, 1, 2, 3, 4, 1 day, the price didn't crash. So that means there is a very high probability the price is gonna reverse. So where is the next area of resistance in 4-hour chart? It's around here. The next area of consolidation around here. The next area is this one, on all the way, maybe around here, the top, around here. Yes, because 1, 2, 3, around here. So if I buy here, it's because I'm going to sell around this level in the next area of resistance. But my entry is going to be very easy to manage the risk. Why? Because I am in the lowest point of where the buyers are right now. I buy here at $30,000. I set my risk management around maybe $28,000, just 1,000, just something I can afford, and I will wait. And after that, look at this, the market bounced because the price was consolidating in the lows. You can learn about consolidation and distribution in my previous video. So after that, because I don't know the future, I don't know if Bitcoin is going to bounce more, I close my position in the next area of interest, like around $32,000, 300, 400, around there, and that's it. My trade is over. After that, as you can see, traders, they know this because they are trading 4 hour and they start selling here. That's why the price entered in range again here. And technically speaking, I know this is a resistance. After maybe one day, I decided to enter in short here, thinking maybe Bitcoin is gonna get rejected here. And I swear is the funny thing comes, the interesting thing part comes. I apply the opposite thing. What I did here, I do the opposite thing here in the for shorts. So because I know this is the area of selling in 4 hour, I'm going to enter in short position around here. My position was 32,500 around here, and I'm going to just to manage my risk around around maybe 32,000, maybe just $500 around here. Let me show you. Okay, here around $30,000. So my bias is because the downtrend, the Bitcoin is in downtrend. Don't get me wrong, Bitcoin is in downtrend. Always I am looking for shorts. So if Bitcoin breaks this level, it's getting rejected, I'm gonna enjoy my profits, right? And always my next target is gonna be the next area of consolidation, this area around $30,000 again. So what happened after that? I entered in short position 12 hours ago in this candle here, around here, and after 8 hours or 12 hours, I see the price holding this area, consolidating in the highs. And here, when I saw here this high, I got a stop around here. I got to stop it here. So totally fine. Why? Because it's part of my system, my risk management. Maybe I was wrong, maybe the price will crash, but in this case I was totally right with my stop loss. Why? Because if I wait a little bit more, hoping, now I will just get wrecked. You see? And now the price is bouncing, and it's still bouncing actually. According to the 4-hour chart, the next area of demand is around, let me see. Well, actually, don't get me wrong, all this area is resistance. All this area. That's why I am not very bullish on Bitcoin right now. The next area, it should be around here. Around $35,000, $34,000, around there. Yeah. Around here. So, and as you can see, it's very easy to manage the risk when you buy in the right area, or you want to enter in short, you sell in the right area. That is something that is the most complicated thing. Also, other thing is, like many people, when they see a green candle, here, they want to buy here in the middle of the candle. So tell me your risk management, or how you can handle your risk management here. You don't want to get stopped here. You need to set your stop loss below here, this area. So it's very far. So your probabilities to make money are less. So now think about this. Okay, using price action, I show you my way how I risk I set my stop loss and my risk management, right? But let's use a tool for doing this. On TradingView, you can find many indicators, but one of them is ATR stops. Here is the first one. Here you can use this one as a tool, and is this one. You see here. Let me check the colors here. I'm gonna do it more obvious for you. This indicator is telling you the direction of the trend, and second, where you could set your stop loss in your entries. I'm not going to explain how ATR is working. There are many videos on YouTube you can learn about ATR, but in general is the volatility of the market. Based on the volatility of the market is a stop. So, and also this indicator is very easy, very good to identify the trend. For example, here when it's red, of course you are looking for short. When it's green, you are looking for longs. And as you can see here, ETR from this level, $40,000, all this area was just looking for shorts. I'm not going to explain how to use this indicator for trending. I'm going to explain this indicator how to use it for risk management, because I have other tools to help me when I can enter in short or long or trend, these kind of things. I don't use this indicator for trending as a trending indicator, sorry. So now the risk management is very easy. For example, in 4 hour here, let's think about this. We know this around here, yeah, maybe here. Again, we don't know. Sorry sorry. Let me. Okay, perfect. It's better now. We are here. Okay. The price bounced from $29,000 to almost $34,000, and it's testing the MA 55. Now I can see some rejection, but look at this. The ETR is at $36,000. So ETR is, or this ETR stops is saying, suggesting, hey, you want to enter in short position right now here, your stop loss should be around here. So you enter, your position is here, your stop loss is around here based on the volatility. Okay, that's it, simple. So you enter here at $35,000, you set your stop loss at $36,000, 122, and just wait. But think about this. If you don't take the right position, your position is very bad in long or short, you will very far away of the stop loss. For example, here you enter in FOMO, for no reason you buy in the middle of this move, and your stop loss according to the ETR is very far, around 7%. You don't want to do it, right? You want to catch the right position. That's why you must build a system or a strategy that can help you to enter in the right moment. So in this example, ETR is telling me, hey, your short position, your stop loss, sorry, should be around here. And that's why you need to, you can handle your stop loss here, and look, just wait for your technical analysis on system works, and in this case it's working very good. So you buy here and you sell maybe here, who knows, maybe you sell here and you make money, right? So as you can see here, ATR is dynamic and is telling you what to do, and also you know exactly where are the shorts, the stop loss. All the people they bought here, if they are following ETR, because many are doing this, they are moving the stop loss according to the ETR. So I'm gonna explain you that in a trending market, but not now. Now you can see here the market is bouncing, and market makers, they know this, and they will kill all the people who enter in short here, taking their stop loss. You see this? Let me show you. You see? ATR tested, people were liquidated with positions, and after that the market reversed. It's very easy. I saw it many times. So look at this. All the people who entered in short in this position, now they move their position around here, the stop loss, and they got just liquidated. And the market, I wouldn't be surprised if it's just going a little bit more upside to kill all the people here. Oh, what happened? I was right. Look at this. All the people who entered in short here, they didn't close the position, and because they were thinking Bitcoin is going to zero, and they got stopped in here. That's why you need to learn how to identify sideways, trending moves, and distribution and consolidation. Bitcoin is in sideways. Actually, technically speaking, it's still in sideways right now, but now the chart is more bearish than bullish. So as you can see here, ETR it can help you a lot to protect your entries. Now, as you can see here, the ETR is changing to green, so that means the market in 4 hours is reversing to the upside, right? So now the dip is here, is testing the MA55. If you want to enter in long position here, because it's totally valid, the ATR is telling you your stop loss should be around $33,000. You enter in long position here, maybe hoping because your system is telling you that, and now just you wait, and after that you get stopped here. Remember, we cannot win all the trades, right? And after that, what happened? The price bounce. So as you can see here, you can use the ETR to manage your risk instead of just buying like because someone told you can do it. Honestly, in 4 hours is very risky if you are trading. If you are an investor, or one day chart, weekly chart is very powerful. Let me show you something. I explain now how my way when I am trading the range right now, right? But let's think about the big picture, okay? Now think about this when Bitcoin was dumped in 2020, right? So first of all, technically speaking, your system is telling you, hey, okay, I'm going to buy in this area around here, and I want to manage my risk. Okay, I have no idea how to do it. Perfect. I'm going to use ATR, and I'm going to use it like this. Every time when the market is moving to the upside, I'm going to move my stop loss following the price. Here. Every week, I'm going to raise up my stop. So that means my profits, when I started around here, it was 5%, 25%, 19%, 40%, and now 60% around here. But the price, of course, is always above. In this moment, the price is around here, and my stop loss is around here. It's a stop loss around here and around here. The price is around here. Do you get the point? You are following, ETR is just following the price. And many people, actually, let me tell you something, many bots, they are doing this. The ETR right now for longs, many long positions, they close right now. Why? Because they got stopped. Remember, the market makers, they know this. So all the people that they are making money right now, the market will reverse and they will hit their stops. So many long positions right now, they are cashing out right now. Why? Because the ETR is saying it's time to sell. So what is going to happen here? Well, based on all my experience, I wouldn't be surprised if Bitcoin just pumps a little bit more, and after that, crash. It's my guess. It's not technical analysis, okay? It's my guess. Technical analysis, as I said to you, I will not change my bias. I need to see Bitcoin doing specific things to change my bias. But I will do a technical analysis in weekly chart this Sunday, because every week I do a technical analysis for Bitcoin. Okay, so as you can see here, if you follow this ETR indicator and you buy now $10,000, you sell around $32,000. Just following this, you manage your risk. I mean, the point is, maybe you didn't sell the high, but at least if the market reverse, you didn't lose. Okay, you made money. In one day chart, you can do exactly the same. Every time when you enter in position, for example, you enter in position around here in short position, here you make money, right? And after the market will go for you and will take your stop. You enter in short position around here again. For example, the market is again here. your stop loss should be around here. You are totally fine. In this point, the market bounced but didn't hit your your ETR, so you are fine. So I know this topic is a little bit complex, but as you can see here, you practice, you will make it. Okay, so now, for example, my system, when I said, okay, I'm going to enter in short position here, because Bitcoin is getting rejected from this area, ETR told me my stop loss should be around here, and my short was played super good. Why? Because I entered in short position here. My risk management, my stop loss was around here, 10% because it's one day time frame, and I was expecting to see the next area of demand around here, and I closed my position. Maybe 1 week, sorry, I was holding this position and I closed around here. And every time when Bitcoin is bouncing right now, is testing, is getting rejected. So as I said, now this is not financial advice right now, right? But as you can see here, Bitcoin is about to test this level. Why? It's very easy. All the people who are just in short from $60,000, they are doing this. They are moving their stops. So I wouldn't be surprised if the Bitcoin comes here, bounce a little bit more, maybe $35,000, $36,000. Kill all the people, all the shorts from $60,000, and from there, keep falling. Sorry. And as you can see here, the ETR is telling me all the shorts, they move their position to $35,000. So market makers, they know this. So that's why they will hunt these kind of people and they will kill them. And they will do this. And potentially a reversal. That's why ETR will give you very good information. Where are the stops? Where you can set your stop. And how you can manage your risk. So let's do the last thing, a monthly chart. In monthly chart, where are the stops of the people, the investors? Well, now you know. $16,000. So I wouldn't be surprised in the next 6 months, if I am right with my technical analysis, we will see Bitcoin testing here, killing all the people here, and to go to the upside again. You will say, okay, but I didn't see this price, the same thing happened before. No. It's because the volatility, as you can see here, was higher. If you buy here at $3,000, you're using ETR as investor, you have to put your stop loss as around $2,000. So from $3,000 to $2,000 is just $1,000 range. Actually, it's not bad. From here to here is just, well, in this scale is a lot. But now Bitcoin, the volatility is increasing. Right now is more. That's why the ATR is trending higher. Now $1,000 move for Bitcoin is nothing. If you really want to see a big move for Bitcoin, you need to see $10,000. So now you can see the volatility is increasing. Is very high. Why? Because Bitcoin is moving very hard right now in macro scale. So I hope this video can be helpful for you. If you watch all my videos, all the videos, maybe you will find a good way how to start trading, because that is the idea of this channel. Well guys, thank you very much for watching this video, and see you next time.